Hello and welcome everyone to the week ahead commodity report for the 4th to the 8th of March 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And of course today we will be going through a forecast and key levels for this week on platinum, silver, gold and also crude oil. So over the last week we've seen gold prices falling significantly, in fact on Friday more than 1% to the lowest level since January, heading for the biggest weekly decline in more than 1.5 years as the US dollar strengthened and global stock markets advanced on Friday. Meanwhile, oil prices settled down 2% on Friday, ending the week 3% lower as concerns over global demand and growth after weak US manufacturing data overshadowed the OPEC-led supply cuts. We've also continued to see hedge funds and money managers cut their bullish bets on US crude oil in the latest week. So with that, we'll go over to the charts and we'll talk you through our forecasts as we go into next week. First of all, let's move over to platinum, and I congratulate all of you who also looked at this trade idea as well over the last month, because we've seen a very large breakout here over the last couple of weeks, with platinum breaking out to 6-month highs. In fact, platinum closed the month of February up over 6% and has hit our profit target for 620 points profit. So last week we discussed with platinum we were continuing to manage this trade, trailing up our stop loss, continue to see the price of platinum drive all the way higher up towards these 6-month highs before we saw a bit of a retracement in price here off that $876 per ounce zone. So for us here, platinum has now completed the move. It's a trade idea that we discussed a number of times on the week ahead report, especially here on the higher time frames where you can see platinum on the weekly chart. We had some really strong support around that $800 per ounce zone. We have seen a pullback certainly on the precious metals over the last week. We're now moving into March, which, as I mentioned last week, traditionally is not a strong month for the metals. So with that, we could look for potential pullback opportunities here with the metals. Now, if we have a look at platinum, it's actually now pulling back from that overhead level of resistance. Normally over the month of March, platinum is negative by minus 2.3% over the month. So far it's pulled back almost 1%, but certainly you can see with the price structure here, if we break back below Friday's lows, we might actually start to see more acceleration to the downside. Now revisit back towards that 845 to 840 zone. That would be the next major level. So essentially going into next week, if we were to see platinum under pressure and other metals also under pressure, bearing in mind that next week on Thursday we have the European Central Bank announcement, and then on Friday we have non-farm payrolls, we may get some degree of a correction here because it has become very overbought, and we could potentially see a rotation lower for platinum as we go into next week. I would keep that on the radar because it could lend into a V-shaped reversal sell-off here in order to see the price action come back to the previous level of major resistance, which could then provide some degree of support and be a profit target. Then moving over to gold. We finally got a resolution on gold last week. So we had discussed whether the minutes of the FOMC statement where we saw gold break out to $1,345 per ounce, whether that was the top on gold or whether gold was going to be able to stage another attempt over the last week to break back out towards the swing highs. Gold consolidated for most of the week last week up until Wednesday. That's where it started to roll over, retested the 21 MA and also the lower trend channel here with gold as well. And you can see here where we've now had a firm close below that zone on Friday and a bit of a flush out here as well. In fact, usually gold over the month of March produces a net negative return of 1.5%. And we've seen that whole move just on Friday. So the move to the downside on Friday put gold down for the month of March, just on the very first day of March, down 1.5% already. So now the question going into next week is whether gold is going to catch a bid from this level of support around the 1295 zone, which on higher time frames has been a very important level, or whether we're going to roll over a little bit lower here going into next week. You've got the next major levels at 1286 and then below that at 1276. You can see that's been a major area of consolidation where support came in at the beginning of January as well. Those are the key levels that I would really look at as we go into next week. Usually weeks where you've got the European Central Bank announcement and Mario Draghi's press conference afterwards, which will be on Thursday, don't tend to be that strong for gold towards the end of the week. We might see some degree of a retracement in the early part of the week because gold is quite overdone. You might see some profit taking here from sell shorts at the beginning of the week as well, but I would be a little bit careful here given that we've got Friday non-farm payroll, Thursday European Central Bank announcement, and it could see gold under a bit of pressure. That said, if we do springboard higher here because we've seen a 1.5% sell-off already for gold, I would look to see whether gold can reclaim back above 1300. So if it does catch some degree of a bounce here next week, it really needs to reclaim back above that 1,300 US dollar level. Again, I would be looking at approximately a 200 to 250 point range for gold going into next week. And if it was to roll over, I would look at support to come in around that 1276 to 1286 zone. Those are really the next major levels on the chart, and on the bullish side, it needs to reclaim back above that 1300 to 1302 zone. Okay, so that's what we're looking at on gold as we go into next week. Then moving over to silver. So silver had quite a dramatic sell-off here on Friday. So over a 2.5% sell-off to the downside. What I would watch out for next week on silver is whether we do see evidence of support coming in at Friday's lows here. So around the 1515 zone is a major level of previous resistance turn support, and also the swing lows going back to mid-January as well. So potentially we might see a bounce and some sort of retracement from this level. If we do roll over and break back below Friday's lows, that's where silver could potentially come down and retest the $15 zone. That would also be a very key level here, which has provided resistance in the past and also major support as well. So those are really the next major levels I would look at. If we do springboard higher from this level as we get towards the beginning of next week and we do see some degree of a retracement, what we may see is a bit of consolidation here as we get closer to Thursday's European Central Bank announcement and Friday's non-farm payrolls as well. Then moving over to crude oil. So crude oil dropped on Friday, 2% move to the downside. So you're seeing a bit of a common theme here that a lot of commodities, they sold off on Friday. Fairly significant moves to the downside. We saw the stock markets continue to rally, S&P 500 breaking back above that 2,800 zone, and we've seen the US dollar pick up momentum as well, and that's put pressure also on oil here too into the close. Now we're back at that major zone again here on oil at 56 US dollars per barrel, and we're right at that key zone of support here where you've got the 21-day moving average just underneath. You've also got 55 US dollars per barrel, which has been an important level of support over the last week or so, where we've seen certainly buyers come in at the lower end of that zone. Although we pulled back on Friday with a false breakout to the upside here, we are just tending to ricochet between support and resistance. If we take it higher time frame and you look at this on the weekly, it's more evident where we have a V-shaped reversal pattern here on oil, and you can see very clearly where you've got the levels of major support coming in around that 55 US dollars per barrel handle. I want to see how the price structure does develop as we go into next week. Essentially, from a very simplistic point of view, if oil was to break and close back below this trend channel and also back below the 21-day moving average next week, I would wait and see how the price action is going to follow through, because if we do break and close below that, it does open up the door potentially back towards the 53 US dollars per barrel zone. Only if we break below the weekly swing lows and we see a break and close back below the 21 MA there. On the flip side of that, if we hold and springboard off this zone into next week, it could actually present a really good opportunity to build a long position and buy back in at that 55 US dollars per barrel zone if we do see evidence of support at that zone as we go into next week. So it is a bit of a decision point for oil at the beginning of next week. We want to see whether it will be able to springboard higher from these zones. What I'm ultimately looking here for oil is a retest back towards 60 US dollars per barrel, but we do want to wait for a bit more confirmation before adding to further positions. So next week is going to be decision time here for oil. That 55 US dollars to 56 US dollars per barrel has been the sweet spot over the last couple of weeks here to look for long positions. And again, week to week, oil tends to move within approximately a 300 to 400 point range. Now, of course, if you would like to be kept updated with the trades that we'll be taking at the Gold and Silver Club, join a community of successful traders. Also, make sure you're kept updated with all of the narratives and major news in the market as we get towards Thursday's European Central Bank announcement and Friday's non-farm payrolls. There is an opportunity for you to join us. As a member, you get access to exclusive live trading room webinars. You have real-time trade alerts, as well as access to our trading research, market insights. You have your own private Members Academy website logins where you can review all of our training material, all of our research, our strategies, and you also have access to support and mentoring. For more information about the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you. And finally, do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.